Listen, you know I've been super bullish on Bitcoin and crypto, but when there's a risk to our bull market, I have to be the one to show you the risk. So today I'm going to show you a potential risk to our crypto bull market. I'm also going to show you who's been killing our altcoins, because someone has been out there killing our altcoins. I'm going to show you exactly who's been killing our altcoins. Then we're going to take a look at the charts, and what you can see is that today is the monthly close, and we've got a very unique candle here on the monthly close. We're going to talk about this monthly close, and it also correlates to the FOMC meeting which is happening today. So we could actually get a pump because of the FOMC meeting, and I'm going to show you how the monthly close in the charts and the FOMC meeting are actually aligning and how it's all coming together. But there is a risk to our bull market, and we're going to talk about it because that's what we do. We bring you the news as it is and not just hype you guys up. So let's talk about it. You know, when someone is as insanely bullish as I am, it's so hard for me to do a show where we talk about risks. But I think it's the right thing to do, is to, when there is a risk, to show you guys exactly what the risk is, right? So today we're going to talk about the risk to our bull market. We're going to talk about who's been killing our altcoins. We're also going to talk about the potential pump that could happen today because of the FOMC meeting and why there could be a potential pump. We've got a lot to do today. But what I need from you is I need you guys to subscribe to the channel, because I read a statistic that only 70% of you are subscribed to our channel. Now that's crazy. Only 70% of the people that watch our shows are subscribed. Does that mean that the other 30% of the people that watch the shows unsubscribe, don't like the channel? I don't understand. So listen, subscribe. If you are subscribed, what I need to do is to smash a like button. Yesterday we got 2,100 likes during the live stream. Today we got to beat that. We got to beat that. I already see that there's more people here today than there were yesterday, so we can actually beat that. Anyway, I'm not going to waste any more time because we've got a lot to do. There's a lot of alpha that I have to give you guys. I'm counting on you guys for the likes. I'm counting on you guys for the subscribes, and you can count on me for the alpha. And so let's get into the alpha, right? So as I mentioned to you, today is a big day. It is the end of July, which means that we get the monthly close. So, you know, if you go to TradingView, you can go and set your monthly candle. Now, if you look at this monthly candle, there's a few things that you need to see about this monthly candle. The first thing that you need to see about the monthly candle is that it has a very long a very long bar down, a very short body, and then a shorter bar up. Do you know what this means? Josh, do you know what this means when you get a long bar down and then a short bar up and a body in between? Do you know what that means? That is what you call a pin bar candle, my friend. Now, what is a pin bar candle? A pin bar candle effectively means that the liquidity has been taken away on the one side, and now the direction of the candle is going to change, and we're going to continue to go up on the other side. So here, the liquidity on the downside gets sucked, and then we continue to go in the other direction. If you want confirmation of that, obviously you can go to Google, just go look at the reversal of prices, or go look what a pin bar actually means. Crypto Jelly summarizes it, and I think he summarizes it pretty well. What he says, Bitcoin took out all the available downside liquidity and pushed back above the key support 17 hours when he wrote this tweet until the monthly close. Looks good for upside in August. And it is true that it does look good for upside in August. And you can see that in the next tweet over here, which what this tweet basically says is it shows that the 2021 high has been the support for now 1, 2, 3, 4, 5 months. So we broke up about it and we've been above it for 5 months. So this will be the 6th monthly close above the 2021 high. That's very bullish. It sticks to our thesis and it sticks to our narrative that the breakout is about to come. You know, I've been very bullish and I've said to you guys that the breakout is about to come. And I think that within 30 to 60 days, we will be at all-time high, or we will break the all-time high. Here, he's talking about September. September is exactly 32 days away. So I said 30 to 60 days about 10 days ago. So you can see that everything is lining up for that breakout that we've been talking about. The charts, what I've been saying, what Direct Capital has been saying. And I mean, I know it has been kind of boring, but I mean, we've got to just talk about this tweet, because I often say to myself, I wish that I could go back to a time when Bitcoin was trading at $1,000. I wish I would have bought more Bitcoin when it was trading at $20,000. And at the time when Bitcoin was trading at $20,000, I thought the price was very, very high. And now I wish, like, my God, I wish I would have bought more at 20. And I think what Miles says here is really, he says, I'm not ready for 100K Bitcoin just yet. I'm still stacking. And I think he's right. You've got to change your mindset to almost say, like, look, this is a stacking opportunity. You ain't going to get very many stacking opportunities out there. This is one of the opportunities that you got to stake. The longer it lasts, the better to stack. The longer it lasts, the better. Because once it's over and we do get into this part of the bull market, that's it. You can't stack anymore. That's it. You cannot stack anymore. So that's the story. And what you can kind of feel right now, or certainly I can feel right now, is that the undertone for Bitcoin is changing. Now, I listened to this interview. It's about a minute long. And I can tell you, I listened to it about 5 or 6 times. And I think it's imperative that we listen to this interview today on the day of FOMC. Remember, today there is an FOMC. Jerome Powell is speaking. We're going to want to see if he's going to increase or decrease interest rates. You have to listen to this interview. I tell you, I've listened to this interview 7 times.
Now, certainly, if more companies decide that they want to buy and never sell Bitcoin, it's going to increase the demand relative to the fixed supply. We all know that that would work in favor of the prices. But what problem is solved by companies doing that? I mean, I just don't know how many companies are really going to want to place that sort of an asset on their balance sheet and have that be an aspect of their story.
Well, I think it's worth asking what their alternatives are. And the alternative is, you can buy a treasury asset that whose white paper says it's going to depreciate at 2% a year at least. And if you look back at the history of the Federal Reserve, they printed approximately 6% supply growth over an incredibly long period of time. 6% supply growth, that just happens to correlate with the long-term growth rate of nominal GDP. What do you know? So here's the real deal. Bitcoin is the new global denominator for capital. So the problem it solves is you don't have all of these politicians running around trying to curry for favor and redistribute wealth and change taxes and change all sorts of things. You get what you get. You get 21 million Bitcoin and that's it. And so, you know, we're incredibly optimistic about it over the long term as these dominoes continue to fall in favor of Bitcoin.
So it just, it does feel like, it feels like the tide, it feels like the tide is changing. It feels like TradFi is really now embracing the message. We kept saying it, but I think when presidential candidates do this, when Cynthia Lummis launches an actual bill to make Bitcoin a strategic reserve, it does feel like this time the tide is actually turning, and it's not just a bunch of crypto people. You got Goldman Sachs CEO saying Bitcoin has a legitimate case as a store of value. They're starting to really understand the 21 million fixed supply versus treasury bonds, inflation, nominal GDP, etc. They're really starting to understand it. Also, it feels like the tide's changed not only for Bitcoin, but actually for crypto. So for Bitcoin, we've had the presidential candidate speaking about it. We've had the ETFs. We've seen that. For ETH, we've now got an ETF. We've also got for altcoins, the tide changing. And when I say the tide's changing for altcoins, a lot of people missed this. And we spoke about it yesterday, but I don't think we spoke about it for long enough to say that in the SEC action against Binance, they want to change it to remove Sol, ADA, and Matic being unregistered securities. Now, remember that's been a cloud that's been sitting above altcoins for a long time. And there's been a gray cloud over altcoins for a long time because we've always thought that they may or may not be securities. Now there's talks of the SEC removing that, and that's in the Binance case, and they still have the Coinbase case. Now, it would be kind of crazy if they removed it from the Binance case, but didn't remove it from the Coinbase case. And so it could mean that we may be in a position now where they're going to change or drop some of the charges that they've got against Coinbase as well. And so I think that if you look at the sentiment, you've got great Bitcoin sentiment, you've got ETH and the ETF, and we'll talk about the ETH ETF in a second. You've got this thing around altcoins, which has been a cloud, and it's only one of the clouds, that's for sure. But you got this cloud against altcoins, which might actually be getting lifted very, very soon. You got this from Russia, and I don't know how serious this is, but Russia's State Duma passed 2 bills on Tuesday including one authorizing the Bank of Russia to oversee crypto-related cross-border settlement and exchange trading. Basically, because of the sanctions, Russia is now allowing crypto settlement. Now, I mean, that's big because it almost shows that if the US wants to try and bully other nations with sanctions and stuff like that, well, they'll just approve crypto, and crypto will become the de facto settlement asset. And that comes down to the sovereign FOMO. When it comes to ETH, we saw an inflow day yesterday into the ETFs, which was amazing because remember, all the previous days have been outflow days. And what I said to you yesterday was, I said, look, I think very soon the outflows will end and the inflows will begin. And when the inflows actually start beginning, I think that's when ETH actually starts taking off. But first, what we need the outflows out of ETH to start slowing down. Now, yesterday, they already showed that they're slowing down. Remember, it was 100, minus 300, minus 300, minus 300. Yesterday was minus 200 or something. And now it's minus 120. So it looks like the ETH pressure onto the market has actually slowed down. And this tweet by Von Spencer, he says, BlackRock had more flows into the ETH ETF than into the Bitcoin ETF, which was the one of the first days that we've ever had that. Now, that just shows you that ETH is now coming into its own. And I did say yesterday, we did the show yesterday, and I said that when this ETH selling is done, I think that when you take the staking plus the ETF demand, plus the fact that Wall Street will start understanding it, I think ETH will start moving. And I did say yesterday, I don't want to bore you guys with the same show as yesterday. If you missed yesterday's show, go and watch it. But I did say yesterday that this ETH trade is a big trade in my opinion. It's going to take a little bit of time for the ETH thing to be washed out. But then you've got to be in the ETH and in the ETH betas. And yesterday we spoke about what the most reflexive tokens were if ETH moves. And you can go and watch yesterday's show if you want to see it. In the meantime, the ETH ETF is doing very well. In 1 week of trading, iShares Ethereum ETF had already in top 15 inflows of all ETFs launched this year. So it's not as good as the Bitcoin ETF, but it is much better than the other ETF. 𝗕𝗓𝗣𝗥, who I've been following for a long time. He's, someone who's been around for probably as long as I've been around. I remember him trading in 2017, actually. He says, the positive ETF inflow news got me to look at the ETH chart for the first time in months. So you see, it's starting to happen. It's starting to happen for Ethereum. Don't get caught with your pants down on Ethereum. Someone says, the last time ETH outperformed the NASDAQ during a down month, it rose 26% over the next 2 months and 85% over the subsequent 4 months. And July, ETH to date, minus 1%, NASDAQ minus 2%. So we could be seeing a little ETH pump very, very, very soon. And as I said yesterday, I don't want to repeat yesterday's show, but just make sure that you go and watch it because you need to be prepared for what may happen on ETH. Another thing that you need to be prepared for is you need to be prepared for a pump. And I think you need to be prepared for a pump tonight, as soon as tonight. Now, we will be here when Jerome Powell goes live for the FOMC. Excuse me. We'll be here when Jerome Powell goes live for the FOMC tonight. So you don't need to worry. We'll be here. We'll be bringing you live crypto love and live crypto wisdom. We'll either be here or on Banter Plus. You'll get it. Subscribe to both channels and just follow my Twitter at Cryptomanran, and then you'll know which channel we're going to be on. I've just got to work out the scheduling because I'm on this channel, Dylan's on the other channel, so we'll work that out. In the meantime, you can expect a pump. Now, why do I say you may expect a pump? For sure, Powell's not reducing interest rates tonight, right? And the market kind of knows that there's a 90, let me make this smaller. There is a 96% chance that he's not reducing interest rates tonight. But remember that after today, the next FOMC, there's no FOMC in August. The next one is in the middle of September. And what the market is telling you about September is that there's an 87% chance of an interest rate decrease in September. I mean, just look at this. If you look here there's almost 100% chance of an interest rate, nothing happening. Here, there's almost 100% chance of a decrease. Some are even forecasting a double decrease. Okay, that's crazy. So it feels like the market is saying that Powell is going to be dovish tonight. We've got to look out for a dovish Powell. Dovish, for those of you who don't know what it means bullish. It means that Powell will be soft. He'll talk about inflation coming down and he'll be positive and he'll indicate that we're going to start reducing rates. Now, caution. The market is drunk and optimistic about rates. they are expecting one rate cut next month, another rate cut in November, another rate cut in December. Not going to happen. We may get one next month. I don't think we'll get one next month. I think we'll get one in November, but let's see. Long story short, Powell said that when inflation starts coming down towards 2%, they can start cutting rates. We have had inflation decreasing, as I showed you before. It's decreasing at a faster rate, 3.5, 3.4, 3.3, 3. And the next reading is on the 14th of August before the meeting in September. So if that reading comes down, there is a case that we could actually start reducing rates. All eyes on August the 14th. That's the first thing. I mean, you want to talk about inflation, and I mean, we always bash Kamala Harris. So I think this is the opportunity today to bash Kamala Harris, because we bash Kamala Harris every day. And this will be the first opportunity we get to bash her around inflation, because we were talking about inflation, and I just thought this was funny. And I apologize to anyone who doesn't find this funny. No, I don't really apologize. I don't give a fuck.
The U.S. is experiencing record inflation, the worst in 30 years, way beyond expectations. OPEC didn't increase oil production. Can you tell us a little bit about how you would prevent the new spending in your Build Back Better agenda from exacerbating the problem? And also, what else are you going to do to fix this problem with inflation?
All right, thank you. Well, let's start with this. Prices have gone up,
No kidding.
and families and individuals are dealing with the realities of that bread costs more, that gas costs more. And we have to understand what that means. That's about the cost of living going up. That's about having to stress and stretch limited resources. That's about a source of stress for families that is not only economic, but is on a daily level, something that is a heavy weight to carry. So it is something that we take very seriously. But there is also a point that is important to make on the Build Back Better framework. One, it is designed to make it less expensive for working people to live. It was specifically designed to bring down the costs of childcare and increase.
I mean, I actually can't even watch this. I actually can't even watch it. I'm going to stop it. You can watch it in your own time. But remember, so the Fed tonight is saying, look, we're looking at unemployment and inflation. Now, unemployment now is down to 1.2 job openings. The job openings per unemployed worker is down to 1.2, which is much lower than where it was, but it's still at the pre-COVID level. So it's lower, but not very, very, very low. When it comes to FOMCs, what you can see is that in the last couple of FOMCs, the market actually changed direction. Now, we have been going down, and there is a good chance that we will actually turn around and go up. I am predicting that Jerome Powell comes out today. He's dovish. He indicates that there's going to be rate cuts soon, but isn't committal. He says we will rely on the data. We will get the CPI data on the 14th of August. And then when that happens, I think we'll get the first rate cut in 4 years. So if you look at this, I mean, it's quite interesting to see that the last time that we actually had a rate cut, look at this, was 4 years ago. That was the last time we had a rate cut. In fact, 5 years ago almost was the last time that we actually had a rate cut. So 5 years we haven't had a rate cut. And as the market says, the interest rates are, it seems the market has priced in 100% chance of a September rate cut. And the market expects additional cuts in November and December. I think that that's a bit positive and optimistic, but let's see what happens tonight. I'll be here with you tonight, either here on Banter Plus. You'll be here. I'll bring whiskey. You bring whiskey. We'll sit down. We'll get drunk. Every time Powell says the word data, we drink. We drink and we see what happens. Okay, so you bring whiskey. I bring whiskey. Every time Powell says the word data, we drink. And then... yeah, it'll be fun here tonight. It'll be fun. We'll bring whiskey, right? Yeah. Okay, whiskey or tequila. Make sure that you guys are here. Don't miss it. Everybody, whiskey or tequila. Okay, the one chart that we have to watch tonight is we have to watch the chart of the Dixie, right? Because if Powell indicates that they're going to reduce rates, then what you'll see is that the 𝗕𝗬𝗕𝗓 will actually start dropping. And we want to see the 𝗕𝗬𝗕 dropping so that risk assets can actually go up. So make sure that you actually watch that. Another chart that we have to watch out for, and it's not as bullish as this chart here, is the 𝗕𝗬𝗕 dropping, is actually this chart over here. This is the chart that may actually be the threat to our bull market. And I want to show you what this chart is, because as I said to you, it's very hard for me to be, it's very, very, very hard for me to be bearish. And I'm not bearish, but I do have to show you when there are risks to our bull market. And that's exactly what I'm going to do now. So the chart that we're actually speaking about is this chart over here. This chart over here is the USD against the Japanese yen. Now, what you can see is that the Japanese yen has been depreciating against the US dollar. Look at that over there. So this year, at its peak, the Japanese yen depreciated 15% against the US dollar. But the yen has actually been strengthening, and now it's only down 7.6% against the US dollar. So why is this a threat? Why does this affect the Bitcoin and the crypto bull market? Because the reason why it's a threat is because the reason why this happened is because of two things. The first thing is that Japan actually intervened in their market. So when they intervene into the market, it means that they're buying and selling treasuries in the market to keep their currency strong. Now, they don't want their currency to weaken. The reason why they don't want their currency to weaken is because Japan is not an environment that knows anything about inflation. Okay, Japan's never, ever, ever had inflation. Let me see if I can find you a chart. That is the chart of Japanese inflation. You can see that since this is the interest rate. So they're not used to inflation, but they're also not used to interest. You can see that for the last 20 years or 30 years, Japan hasn't had any interest. No interest rate. Interest rates close to or near zero for the last 30 years. Problem is that now their currency is devaluing. And with their currency devaluing, the problem is that they've been intervening in the market. And eventually what they did today was they actually raised their policy rate. Okay, so they raised their interest rate by 0.25%. Now you may say, well, that's nothing. So what? They raised the interest rate 0.25%. The US has done that, and the US is not 5.25% interest rate. Okay, well, it's not that simple. Let me explain to you why. First thing is, as I said to you, Japan hasn't had interest for pretty much forever. Okay, so you can see since 1997, they had a 0.5% interest. Then they went to zero in Feb 2000, and they've been pretty much at zero all the way along. So what happens? In the case where Japan has interest rates at zero, people borrow money in Japan at zero interest rates, and they go and invest it in markets like the USA to earn 5% on US Treasury bills. I mean, what an amazing way to make money. You go to Japan, you borrow from Japan at no interest, and then you take that money with no interest and you give it to, and you go and buy risky assets in other countries. Seems like the easiest trade in the world, especially when you know that the interest rate is zero. So think about it like this. If I said to you that you could borrow as much money as you wanted from me, and you could buy as much, and you could use that money to go and buy crypto, right? And you would pay zero interest rates. What would you do? You'd borrow the money, and you would go and buy interest, right? And you'd go and buy assets. You would buy treasury bills, you'd buy stocks, you'd buy everything else because you're borrowing money at no cost. And so what happens? Many people, countries, organizations took loans in Japanese yen, okay, and started to buy other assets. They went and bought stocks on the NASDAQ. They went and bought a whole lot of other things because they counted on the fact that Japan would keep interest rates at zero. Okay, shit. Now Japan, all of a sudden, out of the blue, raises the policy interest rate to 0.25%. Holy shit. All these people that thought they were getting interest-free loans now realize, hold on, the loan is not interest-free. Now we have a big problem. What's the problem? The problem is that if Japan starts to increase interest rates, all these people that took leverage are going to have to unwind their trades. Okay, so imagine this. Imagine a whole lot of us took loans in Japanese yen and went and bought NVIDIA. Okay, cool. We bought, the money's free. But if Japan raises its interest rates, all of a sudden, we now have to pay interest. Now we've got to think to ourselves, shit, is this interest, if we're paying interest, we might not make as much as interest, quickly unwind all the trades. What does that mean? It means there could be a major sell-off. Because for many years, people have been borrowing money at 0% to buy riskier assets. And now, all of a sudden, it seems that the Japanese government has said, look, we can't have our currency depreciating, because if we do, we're going to get crazy inflation. And Japan doesn't like inflation. They don't know they hate inflation. So what did they say? Okay, let's increase interest rates. Oh, shit. Hold on a second. There are billions and billions and billions of yen in loans that have been given to people, to governments, to organizations to go and buy shit because they were getting it interest free. Now there's interest rates. Now the trade could start unwinding. Now look at this. I want to show you because it's not coincidental here. Look at the date when Nvidia started to drop and compare that to the date where the USD, to the Japanese started to intervene in their market. What is this showing you? It's showing you that from this point, when the Japanese started to intervene in the market and people started to whiff, to get a sniff of the fact that there's going to be interest rate hikes in Japan, people started to unwind their risk trades. So there is a big risk. The big risk here is that this trade unwinds, and then people have to start selling off all their risk assets and start closing off all their leverage. Now, 𝗕𝗓𝗕𝗓𝗕, who has been on the show before, has been calling this for a while. Now, everyone said, look, you're fear-mongering. He says, the Nvidia trade was the cash and carry trade. It will be proven right about Japan. The credit events sparked by its reversal. I'm not a perma bear. I was just wrong on the timing. I was not wrong on the conditions. Cause and effect, criticize and attack all you want. I will not relent. Okay? What's going on here? He has been calling this reverse cash and carry trade. What is the reverse cash and carry trade? It is when people reverse all their risk positions because the interest rates have gone up in Japan. And he's been calling it for a long time. Everyone said he was fear-mongering. And he says that now it's starting to happen. We have to keep a close eye on what's happening in Japan, because Japan actually is a very important player in the world. You can see when it comes to global liquidity, this is the global liquidity chart versus the S&P 500. I think this is the S&P 500. Yes, it is. So you can see that as global liquidity goes up, so does the S&P 500. There has been a disconnect over here, though. You can see that the global liquidity went down and the S&P 500 continued to go up. Now the global liquidity is starting to turn, and the question is what happens. But what you can see is that Japan is a major contributor here. And so you've got to be super careful around this cash and carry trade. Now, just a couple of things. Number one, 𝗲𝗏 says the following. He says, contrary to popular opinions on X, the last two times that the Bank of Japan purposely strengthened the yen, 2016 and 2022, risk assets took off as a weaker dollar and BOJ intervention are an easing of financial conditions and a net injection of liquidity. What does he mean? Well, if you look at what the 𝗕𝗓𝗓 is, the 𝗕𝗓𝗓 is a basket of currencies which includes the Japanese yen. Now, if you strengthen the Japanese yen, the 𝗕𝗓𝗓 goes down. And so this is what 𝗲𝗏 means. So what we are starting to see is that since the reversal of the cash and carry trade, since this date over here, which was, let's just quickly get an exact date, which was the 11th of July. Okay, so I just want to show you, like, I don't know, you want to call it coincidence? Call it coincidence. That's the 11th, the 10th of July. Let's quickly just look at, let's look at the QQQ, which is the NASDAQ. Okay. I mean, I don't know. That looks a little bit coincidental to me. 11th of July. Let me show you another chart here. Let's go to NVIDIA. NVDA. Here we go. 11th of July. You can see that there was a turning point on the 11th of July, and the turning point exactly correlates to where the Japanese government started to intervene and reverse the cash and carry trade. Now, there are a couple of options. They may not continue to be as aggressive, which means that we get away with it. But it looks like if Japan continue to, let's quickly just look at the USD JPY. If Japan continue to reverse the trade, then they could actually affect global liquidity, which could actually affect risk assets. So you have to keep an eye. We have to keep an eye out. In fact, right now, I'd be watching this chart very, very, very closely. Another thing which I'll do is I'll call 𝗕𝗓𝗣𝗧 tonight, and I'll see if 𝗕𝗓𝗣𝗧 will actually join us for a banter on Friday, and see if we can get 𝗕𝗓𝗣𝗧's opinion, because I know he actually watches all of this. But it's important that you understand what's going on today. Someone says Nvidia up 10% today. I don't think so. Could it be? No. I think people are flooding our bags. It is. Nvidia's up 10% today on the opening. Holy shit. Wow. Okay, well, let's find out. Let's actually find out what's happening. Let's actually find out what's happening. Why Nvidia? Look, here it is. Nvidia is actually up 10% today, which means is the Nasdaq. The Nasdaq's up 2.37%. I think they are anticipating the Jerome Powell pump for later today. The dovish Jerome Powell pump that's actually going to happen later today. Remember, I said to you, I do think we're going to get a very, very dovish Jerome Powell, and I think it's going to drive risk assets very, very high tonight. So I think it's going to be a very exciting one, and of course, we'll be here. So that is the Japan trade. I have warned you about it. I'm glad to see the markets are going up, but I'm also glad that I've showed you the risks and I've showed you everything that is happening all about it. Let's quickly look at the bubbles. Because if Nvidia is up so much today, I would imagine that the bubbles are up so much today, but they're not. Well, let's see what happens later. In fact, maybe we should talk about altcoins now. I was going to talk about altcoins a bit later in the story. Someone says Nvidia is up because of good AMD numbers. Bring back degen run. I'm going full degen. Today we can go full degen. Anyway, let's talk about altcoins. And as you can see, there's not really much happening on the altcoin market. You got a couple of altcoins which are doing really well. You got Casper, which is at all-time highs. I mean, this chart is fucking unbelievable. I mean, we've been in Casper since 3 cents or something like that. It is absolutely unbelievable. This is a token that you just don't sell. Casper is one of those tokens that it gives me real Bitcoin vibes. You just don't sell this token. I mean, it's just one of the strongest and best communities in the world. Another thing is, as I say, not much is happening in altcoins. It takes a lot to move the altcoin market now. It takes a hell of a lot to move the altcoin market now. And I'll tell you why it takes a hell of a lot to move the altcoin market now. Or in fact, how do I know this? Well, don't know if you guys saw this, but this was an announcement yesterday by Avalanche, okay? And they said, what else can Avalanche L1 do? The California DMV is launching its own chain on Avalanche to modernize the vehicle title transfer experience for Californians, 39 million plus residents. Okay, amazing. What incredible news for Avalanche. Problem is, when I look at the chart of AVAX, nothing. Absolutely zero, nothing. So what's going on? I mean, this is amazing news. And Mark Cuban actually he actually spoke about this. He says, the reason why this is huge for crypto is because the people holding the tokens will have an app with an Avalanche wallet. Tens of millions of Californians having and using a crypto wallet over the next 5 years, or however long it takes to normalize the use of wallets. And someone actually responded here. The guy's name is Limitless, and he says, look, I'm actually working on this, and it actually is true. Okay, so this is actually all true. But that said, the price of Avalanche hasn't moved. And so you got to ask yourself a question. What's wrong with the altcoin market? Who broke the altcoin market? Why is the altcoin market looking like this? Why have we got Celestia down 73%, Dimension down 80%, Saga down 80%, Blast down 50%? The answer is very, very, very simple. The altcoin market is broken. Okay, it's gone. It's destroyed. And you want to know who destroyed the altcoin market? I'll tell you who destroyed the altcoin market. Very simple. It came down to this tweet, which I read earlier today. It says, meme coins killed alts this cycle. Cabals extracted all the value and left it. Boomers buying Bitcoin. That's why such a big divergence between altcoins and Bitcoin at the moment. And I think this tweet actually has a lot of merit. Okay, so I'll tell you why I say that. I don't think that meme coins actually broke altcoins. Not at all. In fact, I think what broke altcoins was VCs. Greedy VCs convinced altcoin founders to launch these high FDV low flow tokens to create these huge raises off market. So a project would raise at 10 million, then 30 million, then 50 million, then 100 million, then 200 million, then 300 million, then 500 million off market. Eventually, when the VCs don't want to pay anymore, they hand it over to retail. And then they do like an IDO, or they bring it to the market, and they expect dumb retail to actually buy up the tokens, right? And so the problem is that two things happened. Number one, dumb retail didn't arrive. Okay, so VCs arrived. They bought like crazy. They bought like crazy. They bid up these projects like crazy off market, expecting to offload them onto retail, and retail never arrived. The second problem is that the retail that did actually arrived here and actually said, hold on a second, we're here to make money. We don't really care about the technology. Fuck. I mean, half the retail people don't even know what this technology actually does, don't know what blockchain is. And so what landed up happening was you started to get a barbell. And when I say a barbell, Miles actually spoke about this yesterday in one of his shows, where he said, you're getting a barbell. And the barbell is that you've got people here for Bitcoin, which kind of correlates back to this tweet over here, which says, boomers are buying Bitcoin. That's why there's such a big divergence between Bitcoin and altcoins. And then the retail investors, or the few retail investors that are here, are saying, look, we don't really want Bitcoin because we came here to make money. We had to make money. Where do you make money? Meme coins. And so what happens is you've now got two buckets. One is you could say Bitcoin and almost ETH, because ETH will be the next one. And then after that, well, Bitcoin and ETH. And then you've got nothing. And then you've got meme coins. Again, the reason why that happened is people are here to make money. VCs fucked up the whole game because they convinced companies to keep raising off market very, 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 very high, destroyed the entire market. And so retail, who actually did arrive here, says, we don't give a shit about the tech. And honestly, they don't give a shit about the tech. You don't give a shit about the tech. You couldn't care less. None of you have ever written a smart contract. None of you know how a smart contract works. All you came here for was you came here to make money. You want to know what the next thing is to make money. Problem is, you can't make money when VCs have bid up projects off market to levels that are so high that by the time you get them, they're already at a $1 or $2 billion valuation. So where do you go? Well, you go to meme coins. And that's why the cycle has become so heavily weighted towards meme coins. You've got action in Bitcoin, and then you've got action in one protocol called Pump.Fun. You can see that Pump.Fun made more fees than the Ethereum protocol yesterday. Pump.Fun is just one single platform on Solana. One single use case on Solana made more fees than the entire Ethereum chain in the last 24 hours. Why? Because retail are here to make money. Boomers, ETF people are buying Bitcoin and ETH. Retail is here to make money. Where do you make money? You make money in meme coins. And so right now, a lot of money and a lot of development is actually going into meme coins. I saw this today. I haven't used it. I don't know who built it. I'm not saying you should try it, but it's called makenow.meme. It's the easiest place to launch a coin with only a tweet, completely free. You literally tweet the ticker and the coin description and you launch your own coin. I mean, that is innovation. That is use cases. Again, I don't know these guys. I've never tried it. I can't vouch for the contract. I'm just saying what you can see is that what we've created is we've actually created another use case for crypto. Everyone says, where are the use cases? Where are the use cases? Where are the use cases? Well, here is a use case. The use case is a global casino, okay? That is, I think, to a greater or less extent, unregulatable. Why? Because it's not really a casino, and these things aren't really securities. Meme coins, because they have no utility, and because you're not counting on a central entity, cannot be classified as securities. They also can't be classified as commodities. They also can't be classified as a casino because you're not actually gambling, you're buying tokens. And so right now there's no regulation against it. So it's probably the easiest way to make money for retail investors, or at least that's what they think. But that's also not true. That's also not true. And so I think, just to finish this off, a lot of people are asking whether or not we're going to get a normal crypto cycle where we go Bitcoin into Ethereum, then large cap alts, then small cap alts. A lot of people are going, hold on, no, this cycle might be completely different. It might be just Bitcoin meme coins. I don't believe it's going to happen. I'm of the school of thought of what Chris Boniski says. He says, now that crypto Twitter has convinced itself that all high FTV and low circulation tokens are bad, it's getting near the time for normies to flood in that don't care about the new shiny things, in some cases outperforming those that know better. In other words, what he's saying is at some point, the VC coins will actually start to turn and they'll start outperforming. And so you got to watch out for when that point is. And that is when we will get the catch up for alt season. So don't give up on altcoins. But right now, remember that all the attention is on meme coins. But. Let's have a 1 minute word about meme coins. If you think that meme coins are a game of memes, you're wrong. Okay? Meme coins have got nothing to do with memes. Meme coins, as you know, are all about the cabal. Okay, now, I mean, I spoke to 𝗕𝗓𝗧 earlier today, and he said to me, 𝗕𝗓𝗧, do you know what the cabal is? The cabal is effectively a bunch of insiders. Okay, what are they? There are people with high influence in the meme coin game. And the truth is that I haven't seen very many successful meme coins without the cabal actually involved. When I say cabal, high influence people that can influence coins enough to get momentum and drive the price up. Okay, you can call them pump and dump schemes, you can call them pump and pump schemes, you can call them whatever the hell you want, because these memes aren't really memes. These memes are influencer coins, and the stronger the influencer in the coins, the better the performance of the coin. Okay, you know about this. So you're just going from one evil to another evil. With the VC coins, you kind of know who the evil is. It's the VCs, and you know the rules, and you know exactly what they're doing. With the meme coins, guys, it's not about the memes. It's a fucking casino. And the casino is, can you get into a coin where the cabal are, right? Without, and can you get in there pretty early? Okay, now I want to show you something. I want to show you something. Okay, look, this is one of my favorite meme coins. Full disclosure, I am not invested in this coin. Okay, it's one of my favorite meme coins, but I'm not invested in it. I just want to show it to you. Okay, the coin is you wanted 𝗕𝗓𝗓𝗓? I'll give you 𝗕𝗓𝗓𝗓, smoking chicken fish. Okay. Have you ever seen anything like this before? Okay, but they've got a good meme, and the cabal are in this coin, and because the cabal are in this coin, it's gone from $250,000 market cap all the way up to $100 million market cap. Now, don't tell me that happened because this is a valuable meme. It's a fucking raw chicken with the head of a sardine smoking a cigarette. Okay, it's just an excuse for the cabal to run from place to place. And so we're just replacing one evil with another. And I think that very, very, very soon the market will come back. I think meme coins are going to be and are going to be here forever. And as I said to you guys, we are launching on Banter a meme coin channel. Cool. I have to show you one or two other things today. Number one, a lot of people are asking me about Baked. I think Baked, look, as I said to you, we had to wait for everybody to get out so that we could, so that all the people that got the free airdrops could get out. Now this chart is looking like a chart that you can start buying. And to be honest, now I'm going to start buying my stash because I don't really have a stash of Baked. And I am starting to buy. I tried to buy on Twitter the other day, but unfortunately, I got a little bit killed. As I went out there, people started to push the price up. And I'm not overpaying for this thing, but I'm going to carry on. I'm going to start buying a bag. Okay, I want to show you one or two more things today. One way that you can actually make money for free. It is with one of our sponsors. I want to show you the sponsor because I think it's a great sponsor. Let me show you something. So the sponsor is, it's a way for you to read, it's a way for you to earn money and to do something really, really, really cool. Now the sponsor is 𝗕𝗓𝗓𝗕. Okay, so what is 𝗕𝗓𝗓𝗕? 𝗕𝗓𝗓𝗕 is where you can connect your ETH address to an email server. So in other words, if I want to, I don't know who you are, but I know your ETH server, your ETH wallet address, I can send you a mail. So I can look in your wallet and I can say, hey buddy, looks like you got a cool NFT in your wallet. Do you want to sell it to me? And so people have now created mail around email addresses. It's called 𝗕𝗓𝗓𝗕. And when you read 𝗕𝗓𝗓𝗕, you actually earn. So if people want to market to you, they have to pay you. And so if I read this mail, I earn 2 ethers. Watch this. So I'm gonna open it. Okay, cool. Okay, and I've read to earn it. Now I've earned myself 2 tokens. You see, I've got 270 tokens because I've read email. Now, this is the future of email. It's going to be emailed directly to your wallet, right? If you sign up with a link today, you get 50 free EMC tokens for signing up. You get 500 free EMC for downloading the Ether app, and you earn rewards for doing it. But the main thing is that you'll be one of the first people on wallet email, which is, in my mind, the next generation of email. So do me a favor, go and check it out. This is the link that I want you to check out. Let's go sign up. Sign up, connect it to your ETH wallets, start learning, be one of the first. Also, remember, I'm just a quick reminder. If you haven't signed up for Bitfunded, you've got another 24, 48 hours. I'm going to be funding your accounts, 100 people, but you need to go to my tweet and you need to give me your challenge number like Fahad has done over here. Fahad, I'll fund you, okay? Also, what I learned yesterday is that there's about 20 people right now that are very, very, very up on the money, and they're trading with Bitfunded's money. So if you think that you're a good trader, and you think you could, but you don't have money, you can go to Bitfunded and they will fund your trading if you're a good trader, if you can prove that you're a good trader. And right now there's about, I think, 20 or 16 people that are making a lot of cash. Listen, I will see you guys again later for the FOMC meeting. Until then, it's been amazing hanging out with you. Trade well, my friends. Well done, Josh. You've sped it up.